Ladies and gentlemen, good day and welcome to the Shree Cement Q3 FY23 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Harsh Mittal from ICICI Securities. Thank you, and over to you, sir.
Yeah, thank you, Chico. Good afternoon and warm welcome to everyone. On behalf of ICICI Securities, we welcome you to the third quarter FY23 earnings call of Shree Cement Limited. On the call, we have with us Mr. Neeraj Akhoury, a Managing Director, and Mr. Subhash Jajoo, Chief Financial Officer of the company. Now, at this point of time, I will hand over the floor to Mr. Subhash Jajoo for his opening remarks, which will be followed by an interactive Q&A session. Thank you, and over to you, sir.
Thank you, Harsh. Good evening, ladies and gentlemen. I welcome you to the earnings call of Shree Cement for the quarter ending December 2022. I have along with me our Managing Director, Mr. Neeraj Akhoury, who has recently joined us. Mr. Akhoury needs no introduction. He is a veteran of the industry. I know all of you have interacted with me several times, and most of you would like to hear from him. So without wasting much time, I am handing over to him to give his opening remarks.
Thank you, Subhash, and good evening, ladies and gentlemen. An extreme honor to be here and to be able to discuss and talk to you today evening on our quarter 3 results for 2022-23. I'll just make some of the opening comments. We had I would say that it was a good quarter. In the company, we achieved a cement and clinker sale of roughly about 8.03 million tons, and this is showing a growth of about 23% up from 6.55 million ton the last year same quarter. Even on realizations, we have inched up by about 2% from 4739 to rupees 4854 in the current quarter. And then based on this, the total EBITDA, excluding other income, was down by about 14% to rupees 708 crores as against 826 crores in December 21. EBITDA per ton also stood at about 881 rupee per ton against 1260 of last year. Sequentially, volumes were up by about 8% from 7.46 million ton in September 22 quarter to about 8.03 million tons in last quarter. And the realization was up by 1% from last quarter from 4805 4854. We've shown a healthy increase in total EBITDA, increasing by about 35% from rupees 523 crores last quarter to 708 crores in December 22. Whereas EBITDA per ton also showed an increase from 701 of last quarter to 881 in December 2022 to 881 rupees per ton. So overall, we are seeing a sequential improvement in our performance, and we hope that this trend will continue, showing better numbers than what we have been able to show in the last year, calendar year 2022. Largely, the reduction has been based on fuel prices.
Yes.
As you know, this has impacted many parts of the economy, including cement industry. But as the fuel prices continue to soften, we believe that we will be able to repeat these kind of numbers in the next quarter as well.
In fact, there has been a huge increase in fuel price as compared to last year. In December 21, the cost per calorific value was 1.69 rupees. whereas in the last quarter it shot up to 2.53. However, despite the nominal increase in cement prices during the quarter did little to negate the impact of such sharp rise in the fuel prices. However, on a sequential basis, as Neeraj said, that the cost is coming down for fuel. So on a sequential basis, it has come down from 2.83 registered in Q2 to 2.53. On a capacity, since the sales was good this time, the capacity utilization during the quarter improved on a year-on-year basis from 61% to 72%. The strong volume growth is due to rise in construction activities which we are witnessing across all regions. Government-led infrastructure spending has increased significantly. Urban housing is also seeing number of new projects being launched across all metros and other top-tier cities. Even corporate India is doing a lot of capex nowadays. We expect to end this year, already the sale is, our total sale for the 9 months is around up by 17%, and we expect to close this year at somewhere close to 32 million tons. The company has been actively working on achieving its goal of having 80 million tons capacity by 2030. We have also shared this vision with you earlier. In fact, it was there in our annual report also. The status of the projects under implementation is as follows. As you all know, right now we are working on 3 projects. The 3 million unit in Purulia, West Bengal is nearing completion, and we expect that in another quarter, maybe by June quarter, it should get commissioned. Apart from this, the work on integrated cement unit at Nawalgarh, Rajasthan is on full swing and progressing well. It is likely to be completed by Q3 of financial year 23-24, which is 1 quarter ahead of our earlier scheduled completion of earlier given of Q4 in 23-24. Our third unit, which is an integrated cement unit of 3 million ton in Guntur, Andhra Pradesh, is also progressing well. We expect completion of the project also to be advanced by 1 quarter to Q2 financial year 24-25. No discussion would be complete today without talking about ESG. And now I would request Neeraj to share his views on the same and what we have done.
As you know, ladies and gentlemen, ESG remains one of the top priorities for the group, and we are absolutely determined that we would like to make Shree one of the greenest cement company in the country. One of the big focus for us has been renewable energy and to increase the share of the green power. The share of green power consumption to total power consumption during the quarter increased up to 53% against 47% in the corresponding period last year. We have also added about 84 megawatts of solar power plants in different states during the current financial year. Another 42 megawatts would be added in the next few months. In addition, the company is working in a very focused way in terms of increasing the use of agricultural and industrial waste to improve our thermal substitution rate and replacement of state-of-the-art technologies. Facilities are being installed in most of the plants to strengthen the waste utilization capabilities of the company. We are also very mindful of the management of water for our operations, while being cognizant of the needs of the community by adopting the best available technologies in the plant, as well as implementing an appropriate rainwater harvesting and recharging structures. We have become very proud to say we are now 5 times water positive in our operations. We are also proud to share, very proud to share that we achieved a score of A- as part of the Carbon Disclosure Project, the CDP, for climate change-related disclosures in 2022, which to our view is one of the best in the industry, both in domestic levels as well as global levels. I would like to complete by sharing our outlook for the next fiscal. With several state elections due shortly and the general elections next year, we expect cement demand momentum to continue. The Honorable Finance Minister in the Union Budget has given a major fillip to the infrastructure growth by providing the highest ever allocation of almost 10 lakh crores to the sector. The allocation to railways, road construction, Pradhan Mantri Awas Yojana have also been increased significantly. We believe cement sector is poised for a robust demand growth in the coming years, and we at Shree Cement we are perfectly positioned to perform in this very exciting times in India. I would now open the floor for Q&A. Over to you. Thank you very much, ladies and gentlemen. Again.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. In order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shravan Shah with Dolat Capital. Please go ahead.
Hi, sir. Couple of data points first before asking the questions. So first, could you again repeat in terms of the price increase 2% when we say, is it a QOQ? The number what you mentioned, so can you again repeat the number, the realization, because we have a power revenue. So the 2% increase, just wanted to understand that. And also the trade share, lead distance, fuel mix for this quarter, and also the capex in the 9 months, how much we did, and what's the remaining for this fourth quarter and for next year, and the net and the gross debt.
Yes, Shravan. You have asked quite a lot of data points. Let me just start one by one. On the real, we are up by 2% on year-on-year basis, and in sequentially basis, the realization is up by 1%. On the fuel mix, in this last quarter, almost 58% was the use of pet coke, and 28% was use of coal. Balance was alternative fuel. On trade mix, since last 2-3 quarters, we are having almost 78 to 80% of trade sales, and we believe the same trend is going to continue in future also. The average lead distance for this quarter was 450 kilometers as compared to 9 in second quarter, and 455 kilometers was there last year. So lead distance has slightly increased by 5 kilometers on a year basis, and 9 on a sequential basis. Average fuel cost, I believe we have already said, but I just repeat it. It is 2.53 the fuel cost for the last quarter as compared to 1.69 a year back and 2.83 September 22. Now coming to capex, in the first 9 months, we have spent close to 2,200 crore. This is including the capex done at Shree Cement as well as the base, because now for some of our grinding units are coming up in subsidiary. So total 2,200 crore is what we have spent, and in the balance 3 months we expect to spend close to 700 to 800 crore rupees more, taking the total capex to around 2,900 crore. Yes, please.
Yeah. So for the next year, how much are we looking at in terms of the capex and current? What's the gross and gross debt and the net debt?
Okay. Next year we expect total capex to be in the range of 3,300 to anything between 3,300 to 3,500 crore, and as on gross debt is around 8,300 crore, and the net debt is 5,700 crore. Net cash, sorry, not debt.
Yeah. Okay, got it. So now, so post January, so post December, in terms of this January and till now, have we seen any increase or decrease in the prices in the regions where we are operating? This is first part. Second, in terms of the fuel cost, how much more reduction are we looking at in this quarter?
First of all, in terms of pricing, as compared to December prices, we have not seen any change till now. The pricing is more or less flat, the December and till now in February. And on the pet coke prices, yes, obviously, as and when the high cost inventory is coming down, so the consumption cost will come down. We expect the current cost of pet coke is around, like December quarter it was 2.53 and currently it is around 2.35. So we expect the cost to come down in Q4 also.
Great thing. Okay, thank you. Thank you.
May we request that you return to the question queue for follow-up questions, as there are several participants waiting for their turn. Thank you. Ladies and gentlemen, in order to ensure that the management is able to address all questions for all participants in the conference, please limit your questions to one or two per participant. If you have a follow-up question, we would request you to rejoin the queue. Our next question is from the line of Naveen Sahadev with Nuvama Institutional Equities. Please go ahead.
Right. Thank you. Thank you for the opportunity and pleasure to interact with Akhoury. Sir, I have a slightly big picture question to understand as to, over a 5-year period, what kind of change is it possible to bring in Shree Cement from an organization perspective? Are you focusing on market share gain? Are you focusing on improving the overall brand perception of the company? Or because from a cost perspective, I believe it was always a fairly low-cost producer, and of course there are more levers and companies pursuing that. But my question was, what Akhoury brings to Shree in a course of a medium term, 3 to 5 years?
No, I would hesitate to say what Akhoury brings to Shree. I think Shree is a very strong company with a very well laid out goals and priorities. As management team, our task will be to strengthen those goals and priorities and push the agenda which has been very well laid down even in the past years. There are 3 or 4 big topics on which we are working today. One topic, as I have just covered with you all, is how do we improve our scores on impact on environment. Yeah. And there I would assure you that this is the guidance from the board that we should do everything possible to make ourselves the greenest cement company in the country. And be it in renewables, be it in alternate fuels, be it also finding out some other ways to and other innovations to improve our carbon footprint is something that we are trying to work on, and you will see in the coming years that Shree will make significant advances in some of these topics. The second area which we believe, and at least this is what as a newcomer I believe, that there are very strong performances by Shree in terms of what we have done. For example, just now I disclosed that we are 5 times water positive, but we will now like to build our brand in a way that the market recognizes the strengths of Shree. Market sees Shree as a brand for purchase, and that would be a second area where we are going to work on. We will continue with our work on remaining the cost leader in the industry. A lot of new ideas and new investments and new initiatives are under evaluation today, and this will be one of our efforts. That how do we make Shree continue to remain a player with the most optimized cost, and that's something that. On the other hand, we are also working on our teams, and you will see now Shree we have introduced a new performance levers. For example, we have a very strong team now headed by a very senior person on digital and IT intervention. We are investing a good amount of money to make ourselves modern in terms of technology adoption, be it in terms of CRM, be it in terms of our own internal IT systems like SAP. Significant investments are in process to make our Shree a very modern company in terms of technology. These are some of the big ticket items on which we have prioritized as in terms of our next few years. In addition, as Mr. Jaju said, we are working very hard to reach our goal of 80 million tons of cement capacity. We are making sure that we do all the right things to be able to reach 80 million tons as fast as possible to achieve our objectives. These are some of the big priorities that we have laid out for ourselves, assuring our investors and our shareholders that Shree will continue to invest in the right priority topics. We will continue to bring the right management skills. We'll continue to bring the right initiatives to make Shree stronger than what it is today.
Thank you so much for the detailed answer. And then my second question is about how do you then do the balancing act, in the sense Shree historically what we have seen is volumes have been superior to the industry growth, but even then now the utilization is more like 72%, as Jajuji said initially. So it, relative to other players, it's still on the lower side. But at the same time, if you're saying you're planning to build a brand which is far more superior and overall matching maybe the super premium brands in the industry, so how does this balancing act go? Will now the volume growth be at par with the industry, little lower end of the industry, to focus on the branding and overall realization maximizing perspective, or will there be a separate?
So as I said, on most of these topics, it is not right for me to give a forward-looking statement. What our attempt is to develop a very strong brand. Shree already is a very strong brand, incidentally. I mean, I can say more from being inside Shree and as well as outside Shree. It's already a very strong brand. We were trying to now make it stronger with new investments in the brand area. Which segment we will play, which segment we will focus on, are topics that will evolve as we go on, move in the future. And therefore, a very definite answer to this is not right at this point of time.
Appreciate. Thank you. Thank you so much.
Thank you. Our next question is from the line of Indrajit with CLSA. Please go ahead.
Hi, thank you for the opportunity and thank you for hosting the call. I have two questions. First, on the industry, right? So we talked about how demand growth is likely to be very strong, but what we see in the same time is capacity increases unrelenting and utilizations for the industry is not really going up. With that backdrop, how do you see the industry shaping up? Do you think that we will continue to see these low utilizations and hence pricing power for the industry will remain lower for much, much longer than what we have seen in the past?
So, there have been several studies on this, and what we know for sure is if the demand growth is in the range of 6 to 8%, the supply growth is in the range of 3 to 4%. And therefore, as we move forward, we will see a better demand-supply equations emerging. And that is how I see this industry. And that is how we see this industry, that demand growth in India at 6 to 8% is something one can assume very safely. It's little less some years and little more some years, but 6 to 8%, and that is not going to be the supply growth in India.
Over the long term, I believe 6 to 8% is a fair number for demand. And most of the research houses like CRISIL and all, they have predicted the same number.
Sure, this is helpful. My second question is specific to Shree. So when we look at the roadmap from 55 to 80, so how do you think the split will be between organic, inorganic? Shree doesn't have a history of inorganic expansion. Is it something that we are considering now, and what kind of return ratios or regions we are looking at if we consider any inorganic?
This is not a fair comment that Shree has never been serious about inorganic growth. We even if we have been showing interest, but M&A growth has to be value accretive, has to add value to our shareholders, and it has to be profitable. We would not like to make a move which is not favorable to our shareholders, and that is the spirit which we would like to continue. But it is not that it is wrong to assume that we are not interested in M&A activities. It's just that the opportunity should add value to our shareholders.
So, what kind of IRRs or return ratios you will be looking at if you are considering any?
Hello?
Yeah, I'm saying what kind of return ratios or valuations would you be comfortable with in terms of either EV per ton or ROCs?
It will be very difficult to give what sort of valuation we will be comfortable with. It all depends on the type of asset. We have already seen, like in last 1-2 years, whatever M&As which has happened. Some have happened now people are saying high value, some are saying it is low value. So it will not be correct for me to give a valuation benchmark. It totally depends on region wise. Like if we are not present in central. If we get something in a central region, we may be willing to pay high. But if there is something which is available in south, then we may not be willing to pay that much. So it totally depends on what asset, what region, what size, how much potential is there. Now coming to your question about reaching 80 million ton. So right now there are no inorganic opportunities which I can talk about. So our growth potential is largely the 80 million ton is on the basis of organic. And yes, if any opportunity comes up, it may be additional to it. But right now this 80 million ton roadmap is 100% planned on organic.
Sure.
And we like 55 million ton, you already know we are reaching there. And we have the necessary limestone reserves, and for taking us up to 80 million ton, certain sites have also been identified. We are awaiting statutory approvals. Once the same comes, then probably we will start the work.
Thank you so much, Rajuji and Neerajji.
Thank you. Our next question is from the line of Sumangal Nevatia with Kotak Securities. Please go ahead.
Yeah, good evening and thanks for the opportunity. My first question is on capital allocation strategy. Now, we've been sitting on a very strong cash balance since our QIP, which is earning a very low yield and also return dilutive. So just want to understand, given our focus is largely on organic growth and we also enjoy good cash flows to support organic opportunities, what is our capital allocation strategy and having a strong cash balance on the books?
The cash balance is, there is a lot of cash in the book. That was because during the around 2,500 crore. However, immediately after that, we were not able to start our capex program because for 2 full years, because of COVID, we were not sure about it. And that is why all the plans were put on hold. However, with the pandemic behind us, we have again started our journey. And as we told you earlier that it will be a very aggressive capital expenditure program. And we are looking at 80 million tons. So we believe most of this cash will be utilized in our journey to 80 million tons.
Okay, got it. So, I mean, if you look at this 80 million ton from 55 million ton in 6 years, it looks like more like 6.5% CAGR, which is not
conservative target which we have given. We will obviously try to do better.
Okay. So it was appearing that ambitions are much slower than what we've grown historically. So just want to understand, is it a deliberate move to focus more on utilization, or is it some limestone limitations which is slowing our growth ambitions?
No, there is no limestone limitation as such. We have the necessary resources, but right now we will stay committed to first our 80 million ton plan before looking further. Obviously, we are working on other things also, but right now it will not be correct for me to comment on anything beyond that.
Got it. Thank you and all the best, sir.
Thank you. Our next question is from the line of Pinakin Parekh with JP Morgan. Please go ahead.
Yeah. Thank you very much, sir, for this opportunity and doing a call. So my first question is on cement pricing. Now, you did mention that in the medium term, India's capacity addition should lag demand growth. But if you look for the next 12 to 18 months, every single cement company which has reported earnings so far has talked about commissioning new capacity. And I think this is one of the first years where we have widespread capacity addition in the next 12 to 18 months. In that environment, how do we look at prices, and especially given that fuel costs seem to have peaked out and is falling, is it fair to say that prices, there is downside to cement prices from here, given the incremental capacity addition in the next 12 to 18 months?
No, I would not go to that extent to say there is a downside risk to the prices. What you can argue, and as I said, these are things which is very difficult to state with any amount of certainty of how it will evolve. I mean, you are aware there have been times when capacity was much higher than demand, and yet through innovative means we have been able to stabilize the prices. Yeah, some segments have grown, some new segments have emerged. India still is very low, for example, on concrete roads. So newer segments emerge. So there are ways, there have been initiatives and ways to do it. So I would not say there is a downside risk to the prices just as yet. Even though you're right, some new capacities will be coming up. But in the kind of demand which we'll see, if this once the budget allocations are implemented, executed, I believe it will be sufficient to take care of the new capacities as well.
I would also like to add one more point over here, Pinakin. If you look at the per capita cement consumption of India, which is around 250, which is very low as compared to other countries or maybe the world average. So we have a lot of space to cover in this. And we believe demand is going to remain fairly strong over next couple of years. Thank you.
Sure, sir. Sure, sir. My second question, sir, is on the 80 million ton number in 2030. Now, over the last 1 year, some of your peers, pan-India peers and regional peers have come out with a very aggressive capacity roadmap, have announced large projects. Today, in fact, one of the companies remains committed to doubling capacity over the next 5 years. In that context, sir, A, is there a possibility that the 80 million ton number is brought forward from 2030? And B, is management open to maintain the capacity share over the next 5 years, actually increasing this capacity number that it has in mind?
We would like to not comment on what others are doing or how fast others are running. We will like to maintain and at our own pace. We will like to grow at our own pace. Just because others are doing fast does not mean that we also start running faster. So we believe we have given you a guidance 80 million ton 2030, and we would like to stick to it. Just because the industry is adding up fast, we will not. We will maintain our own pace.
Understood. Thank you very much, sir.
Thank you. Our next question is from the line of Sanjeev Kumar Singh with Motilal Oswal Financial Services. Please go ahead.
Good evening, sir. Thanks for the opportunity. So my first question is that in the last few years, we have been talking about increasing trade sales and share of premium products. So it looks like, given the trade number which you have given, that there has been an increase in trade sales. And so I want to know how has been the sale of premium products and what is our target? So how has been the pickup there?
Our sale of premium product is around 7%, and it has been at these levels only since last few quarters. Now, with the changes which Neeraj has been telling about which we are doing in our marketing team, we believe we should be able to scale this up to at least 15% over a period of next 3 to 4 quarters.
Okay. And second, sir, can you share about the clinker utilization for the company in different regions? So where I'm coming from is that is it is it fair to assume that in the north region, especially in the peak season, we are running at optimum clinker utilization?
I don't have the clinker utilization right now, but yes, on the cement realization, on a region-wise utilization levels I can give you. In north and east we are at around 73%, and in east, in south we are close to 62%.
Okay, sir. Thanks a lot. Thank you.
Thank you. Our next question is from the line of Amit Murarka with Axis Capital. Please go ahead.
Thanks for the opportunity. So just first question would be on cost. Like you mentioned that you would like to maintain the cost advantage for Shree, but what we've seen generally in the industry is that everyone is catching up largely through waste heat plants and split grinding units, a lot of things that Shree has done in the past. So what are the new levers you think you can exercise to maintain the cost advantage? That will be the first question.
Yes. We are working on 2-3 things. Yes, what you have pointed out rightly is correct, like others are also catching up. But we are trying to work on 2-3 things. First of all, as Neeraj said, building on a brand equity. If we increase our realization, we can add some bit of a margin over there. So we are working very hard on that. And the entire team has been reorganized. We are open. In fact, we have divided the post into 2. A person is looking after sales, and there has been a new vertical for marketing which has been created. Secondly, on the cost side, we have taken 2-3 initiatives. First of all, we are trying to increase our rail dispatches. Our current rail dispatches is only 12%. And the primary reason is that we don't have railway siding across some of our plants. So in next 2 years, we are setting up railway siding across all our units so as to get the benefit of railway freight, which is presently cheaper than road freight. Secondly, we are working very hard and trying to increase the use of agricultural and industrial waste in our plant. Our thermal substitution rate for last year was 3%, and we are trying to increase it further. We are targeting a rate of 15% over next 1 year. This will add up to some of our savings. Thirdly, we are working on digitalization. As we have stated earlier, a lot of efficiency may come up once this digitalization process and the app which we are working on will go live. So these are 3-4 initiatives where we are working on in order to improve our realization. And third is and one more reason is on the renewable energy side. Right now, as Neeraj pointed out, almost 52% of our energy comes from green, which is the highest in the industry. I don't think anybody has reached close to this. So we are adding up quite a lot of new solar units. In next 2-3 months, almost 88 megawatt of new plants, 43 megawatt of new solar units will get commissioned. And even after that, we are looking to add this number further. So some delta is going to come from all these. So this is how we are trying to maintain our lead.
Okay, got it. Just on realization, while obviously it will be great to see better realizations and close the gap versus industry, but is it only through brands like Roofon and all, or are you also trying to kind of increase the realization for the core brands like Shree, Bangad and all?
So as we start doing several activities around brand building, which doesn't only mean advertising, it means a lot of other activities, including giving strong support to the influencers, to the IHB users, to non-trade customers. Also work on some of the specialist new product formulations. I believe we will be deploying a mix of several tools, including strengthening our position in the existing brand portfolio, but also trying to introduce some new brands in the market.
Got it. Got it. And my next question would be on capital allocation and dividends. Like generally, while you've laid out the target of 80 million ton, but generally the dividend payouts have also been on the lower side. Like now that the cash is quite big in the books and the deployment will be gradual, like is there a thought around raising the dividend payout as well?
The dividend will progressively go on increasing, but yes, maybe after we foresee a very aggressive capital expenditure program over next 2-3 years. But yes, after 3-4 years, if we find that still the cash is there is a lot of cash surplus, then maybe we will think about giving some additional dividend. We have about 3-4 years back, we have already given an additional dividend once earlier. But right now, at least next 2-3 years, looking at our expenditure program, I don't think we'll be giving it.
Okay, understood. Sure. Thank you. That's all from my side.
Thank you. Our next question is from the line of Prateek Kumar with Jefferies. Please go ahead.
Hello. Yeah, good evening, sir, and thanks for the opportunity. My first question is on this We Lead initiative, which we have talked about in our press release. Are there any quantifiable targets under this We Lead initiative in terms of improvement in profitability or cost savings? I mean, you have mentioned several initiatives which we are undertaking on brand equity and cost. Are there any quantifiable targets in terms of rupees crores or per ton basis over next 2 years or 3 years?
Look, we would like to avoid giving any numbers today. Yeah, We Lead is a journey. It's a journey that we are taking on to ensure that Shree's position as in terms of optimal cost is maintained. We are able to protect our both our cost reputation but also the numbers. It's a continuous journey. So what it really does is across the business functions from manufacturing to sales, we come up with several high impact initiatives that have that influence the business outcomes. So it will be a continuous process. So at this moment, giving a quantifiable number to my mind will be unfair. Thank you.
And sir, a related question to management. Banguji has talked about going back to 1,200 to 1,500 kind of a EBITDA per ton for the company. So, I mean, when do you see that number coming back for the business for yourself in current pricing environment?
Prateek, what number you are saying? EBITDA per ton of how much you said?
1,200 to 1,500.
Well, see, in a commodity business, it is very difficult to take a call on a cement prices. It totally depends on the cement prices. Yes. So, and fuel prices. So there are two things which we cannot comment upon. So it will be very difficult when we are going to. If what I can say is that maybe in the current quarter, we should be close to a 4-digit figure. That much I can say. But I will not be able to comment when we are going to reach 1,200 or 1,500. It totally depends on the input prices as well as the cement prices, which cannot be ascertained as of now, both being commodities.
Sure. Thanks, sir. These are my questions.
Thank you. Our next question is from the line of Satyadeep Jain with Ambit Capital. Please go ahead.
Hi, thank you. Just a couple of follow-up questions to some of the questions that have already been asked. One on the brand positioning. She already has 3 brands. In addition to introduction of new brands, would there be a thought on maybe maintaining or shutting down one of the brands? And Mr. Akhoury, given your own background, can you talk the idea of introducing a new brand in a market in category A where there are already many players, kind of overcrowded? Just the challenges and opportunities around introduction of a new brand, given Shree is a sizable player in the market. That's the first question.
So, in my view, in any market for any category, there are always opportunities to launch products with unique value propositions. Yeah. In cement also, there is a history of those brands that have unique value propositions, sometimes more emotional than really tangible. Our effort is, in last few months, what we have done is also to start what I would call a Shree's R&D function. The objective and intent is that we should be able to study the consumer behavior, the market behavior, see the opportunities, and then design a product that meets their expectation in terms of a precise and sharp value proposition. This is an ongoing task, and clearly the pricing of that product or that value proposition will be dependent on how critical that product is to the customer expectations. Yeah? So this is an ongoing process which I see. I know there is a fascination for the A plus or A category, and my view is that Shree has the necessary fundamentals to be an active player across segments in the market, and that's something that we are evaluating of how do we introduce brands which bring more sharper value proposition to our consumers.
Okay, sir. Thank you for this. Secondly, on the growth map for capacity expansion to 80 million tons after the current expansion plan, we understand Shree already has some other projects in pipeline, possibly in future, whether it is Jaisalmer, whether it is Kutch. Could we, I know it is maybe too early, but as we look at different projects that you have in pipeline in the next stage, could we possibly look at some of these new locations in your capacity as you look at 80 million tons?
Yes, obviously the names you mentioned, like in Kutch, we have got limestone mines. So we have applied for statutory clearances. Once the clearances are received, then only we will be starting the work over there. So right now it will not be possible for me to comment or give you the timelines when we are, but yes, in 80 million tons, these new locations are there.
Okay.
And apart from this, for our existing limestone reserves, which we have in our existing mines, be it north, east, and as well as south, there also we have the potential to add on brownfield units. So together with the new locations as well as existing, we should easily be able to reach 80 million tons.
Okay. Thank you. Thank you.
Thank you. Our next question is from the line of Rajesh Kumar Ravi with HDFC Securities. Please go ahead.
Yeah, hi, sir. Good evening. My question pertains to what is the WHR capacity and how much more capacities are getting added over the next 1-2 years?
Sorry.
What you said, WHR capacity?
Yeah, what is the installed waste heat recovery capacity and how much incremental are getting added?
Okay. The new WHR capacity which we are adding is around 45 megawatt. One is there in Nawalgarh and another in Guntur. These two units are going to commission. WHR will also be commissioned once the clinkerization starts over there. And the existing WHR capacity is around 242 megawatts.
Okay, 242 megawatts. So have you added anything in this financial year?
No,
FY23?
The 45 megawatts is going to 3 years, 23-24. And one is going to come up in 24-25, the Andhra one.
Okay, and this 245 you are saying is including the Union Cement?
No. This is only in India. I'm talking about the Indian capacity.
Okay. And second, could you also share the Union Cement performance incrementally, because you would be adding the grinding unit, as you said, to the facility. So it's better to look at the consolidated numbers rather than on standalone basis.
It will not be possible to give individually the performance of our subsidiaries, but overall, yes, the performance is quarter-on-quarter. I can give you the trend. Quarterly basis, it is very slowly improving, I can say. That will be evident from the Concall numbers also.
Okay. No, I'm saying the volume while you're sharing the balance sheet.
Actually, it was a lot of material used to get exported from the UAE market, and Bangladesh and Sri Lanka were two prime markets, and we all know like the Bangladesh and Sri Lanka, both the markets have gone bad. We looking at different markets where we can have replace the material which we used to send to these markets.
Okay. And coming back again to the cash deployment, because you yourself mentioned that you will not be running after capacities, unlike competitors, and we see that your 8 million ton capacity target also to around 7% or CAGR, which is quite, stable number. And in this context, the cash requirement can largely be funded through your internal accruals, because you are already generating 3,000 crore annual cash flows. So why do you still believe that your capex would be too aggressive for your current cash, surplus to stay put?
No, what we have said is 2030 is obviously what we believe we will be able to do. Obviously, we would like to do it much faster, but right now it will not be fair to me to give you the sense that I will be able to complete it in 2028 or so. But as per our internal targets, we believe this cash should be utilized over there. And if at all any surplus will be there, maybe after a period of 2-3 years, then we will think about giving any special dividend or something like that.
Okay, sir. That's all. And lastly, on the what led to a sharp increase in the depreciation quarter on quarter?
No, depreciation has been increased because on a sequential basis, the depreciation has increased because in Q2 end, some solar units were get commissioned. And that is why the full depreciation for those units has been charged in Q3. And Q2, very little depreciation was there. And if you look at it from year-to-year basis, then there are two reasons. First of all, our Raipur plant, which got commissioned in March 22. So obviously, that depreciation for that plant was not there in Q3 last year, whereas the full depreciation is there in this year. And similarly, solar was also not there last year. So that is the reason for increase in depreciation.
Sir, if I one last question on this Maharashtra capacity Patas plant, how is the situation, in terms of ramp up, and given that there are two other companies also ramping up capacities in similar same time, Birla Corp and Dalmia?
I think the ramp up is good over there, and we are already working at around 70% utilization is already there.
Okay. Yes, sir. Thank you. All the best.
May we ask you to return to the question queue for follow-up questions, as there are several participants waiting for their turn. Thank you. Our next question is from the line of Mahek Talati with Yellow Jersey Investment Advisors. Please go ahead.
Yeah, thank you for the opportunity. I had two questions basically. One was in terms of the capex plan which you have announced of 25 million tons additional. Which are the areas which we are targeting, because we have low capacity in Central and South India, West India. So are we focusing these areas?
Central, right now we don't have, will not be able to, right now it is difficult to say. So Central is not there, but yes, both in East, South and North, we would be adding capacities. And along with West, where we have got limestone mines in Gujarat. So these four regions. Central, right now we don't have mines, so that is not there. If we are able to get mines, then obviously that is a very lucrative area for us.
So which means we are consolidating our position in the already existing markets which we are present, correct? That's the correct understanding?
Correct.
Okay. And so second was a bookkeeping question. So you said that our realization has increased by 2% on a year-on-year basis. But if I do the calculations, my an average realization per ton is decreasing by 7%. So I did net revenue divided by the number of sales volume. So that's coming around 5,100 versus 5,500 previous year. So am I missing?
Yes. You are missing one point. We have two segments, cement as well as power. So maybe in some last quarter there has been more of power sale. That is distorted. That is why it's distorted. But power forms a very small part of our segment. That is why we are not giving the numbers separately. So once as you exclude the power numbers, then you will come to this number.
So what was the revenue in these 2-3 quarters which you have mentioned?
Revenue from power?
Yes, for Q3 current quarter.
Power, unfortunately, we will not be able to share the power numbers because we have about 2-3 years back we have discontinued the giving the power number separately. If you want the realization number, that I can share.
Yes, so please share that.
We have, even in the beginning only we have told like the net realization was up by 2%. It was 4739 and it increased to rupees 4854. And on a sequential basis, it was 4805 last quarter.
Okay, understood. Thank you. That's it from my side.
Thank you. Our last question is from Vishal Periwal with IDBI Capital. Please go ahead.
Yeah, sir. Thanks a lot for the opportunity. So on the costing front, I think if you look at 9-month basis, above EBITDA, we have done costing of around 4,300, 4,400 rupees a ton. And a couple of initiatives that you have envisaged that will happen over the next 12 to 18 odd months, the rail sidings or maybe TSR increase and renewable mix increase. So on a like-to-like basis, what could be a reduction in the costing, keeping like the power and fuel cost where exactly it is?
It will be difficult to quantify the number right now because this TSR is a new thing which we have started hardly 2-3 quarters back. So how it's going to scale up? Our target is from 3% to reach to 15%. So giving you a number will not be possible right now. But yes, on a kcal basis, as compared to petcoke, which is something like 2 rupees 35 paisa, the cost of agriculture mass will be close to 1 rupee 50 paisa. So that sort of a thing may be there. Now, how much quantity we will be able to increase, that is to be seen. We have invested into some certain technologies in order to increase its usage. These plant and machinery has been imported from Europe, and these will get installed maybe by March end this year. So next year, we believe we should be able to, our throughput for this agricultural waste and industrial waste will increase significantly. And that is why we are targeting 15% over there.
Okay, sure. Yeah. Okay, and then one data point on the raw material cost, which has been quite volatile, historically and again in this year again. So for the full year basis, how exactly we see this, and what is the reason of this volatility, and for the full year basis, how we see this number on per ton basis?
So the raw material price is not that volatile, but yes, the reason why the raw material price you are seeing has come down slightly. If you would recall, in Q3 last year, there was certain disturbance in East India where because of transport strike, we are unable to move clinker. So we have to buy a lot of clinker from outside in order to feed our grinding unit. And that is why the cost is high last year. Whereas and another thing is that the fly ash price is also increased. So these are two reasons which because of which there is volatility in raw material prices.
Okay. Will it be possible to give a probably like for a full year basis how things probably could pan out or maybe fourth quarter?
A full year basis it will be difficult to give on the pricing front.
Okay, sure. Yeah, that's all from my side. Thank you so much.
Thank you.
Thank you.
That was the end of our question and answer session. I would now like to hand the conference over to the management for closing comments.
So again, thank you very much, ladies and gentlemen, for attending this call, and absolute pleasure to be able to answer to some of your questions. We did try to be as accurate as possible. I hope if there are some remaining questions, you can always you feel free to connect with us again, and anything to do with the results, if you want to ask, you can always. I would reiterate that Shree is a strong company, and most of the steps that now we are taking is with the sole objective of how do we further strengthen it. We have a reputation to protect. We have a reputation to protect as the fastest growing company, as the greenest company, as the lowest cost company, as a company that goes on for innovations in core manufacturing to core supply chain in a very strong way. And there are some reputations that this company has achieved over the last several decades, last 2 decades, and that's something that the current team would continue to work very hard to protect and to further strengthen. So again, thank you very much, and have a good evening, everybody. Thanks again. Bye-bye.
Thank you.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your line.